We've been leaning cyclical for quite a while. We don't think the cycle's over. We're definitely in the pullback camp, although that's getting to be a little lonely right now. We want to be overweight industrials. They've outperformed for the last couple of years. I think that's what you want to do. If we see some kind of pullback, let's say over the course of the next few months, let's say we see a 6% pullback or something like that, which I don't think is any big deal. It's a buying opportunity, and you want to be buying industrials, consumer discretionary, financials. You want to buy things that are going to continue to benefit from the recovery. So that's what we're going to be looking to do should we get that pullback, which we do think we're going to see.
So Scott, what is going to sustain that recovery that you refer to? I mean, if we don't get fundamental tax reform, we can't look to monetary policy easing even further than it is. If anything, it's reversing. So what's going to drive the earnings growth?
Yeah, I tell you, the earnings growth here in the third quarter, Danny mentioned that. I mean, you're only going to see 5-6% earnings growth, something like that. So well down from the first couple of quarters. But for us, really to get beyond 2018, I mean, this is going to be a very modest GDP year. Next year is going to be very modest. Our earnings growth next year probably about 7%. So you're just still in that chugging along kind of pattern. And for us, we would argue, to get beyond 2018 and to really see this expansion continue, you need some fiscal push out of Washington, and just tax reform probably isn't going to do it. The infrastructure spending, less regulation, and any number of other things that you can come up with, the economy is going to need some help to move forward. This is an $18+ trillion economy. A little bit of tax reform or a little bit of anything else isn't going to do it. This stuff needs to be significant.
So when you look at 23,000, how much of that is because of an anticipation of not just tax reform, but actually infrastructure? Because we're a long way away from that.
I really, I think, 23,000 is a number for me that says stock valuations are stretched. There's some hope in the market. It's probably not going to come to fruition. So for me, and as I said, and I'm more of an S&P watcher, I would attribute probably the last 50 to 70 and probably more like 70 points up in the S&P 500, almost solely on the hope for tax reform. And I think the market's got a little too much hope in it right now.